For more on tech's rough week, let's bring in Fast Money friend Gene Munster, managing partner at Deepwater Asset Mgmt. Gene, it's always great to get your thoughts. I want to start off with Oracle, and I'm just curious, how do you think this Oracle story progresses in 2026? And is there, even though we know that Broadcom is a very different company, that NVIDIA is a very different company in terms of customers, in terms of the balance sheet, et cetera, is there the risk of contagion from Oracle to the other AI players in 2026?
In 2026, I think there's less. I think kind of what we've gone through in the last week, I think helps minimize that. I'm glad we've been through this episode in some respects. As far as what kind of the bigger outlook for Oracle in 2026 is, I think it's going to be underperformer relative to the rest of the large cap AI. And the biggest reason is that even though they've got these impressive growth targets, the reality is they probably going to fall somewhere a little bit below. And my sense is it's probably going to be capacity is going to be the kind of the governing factor. And when you have big growth rate targets out there, even if you still have amazing growth, but it falls below what their bar that they said, it's just really hard to improve a multiple. And so I think they've, in some ways, I mean, they had to disclose their backlog, but that beautiful backlog from 3 months ago, and then it improved again by another $63 billion this week. I mean, it's kind of created a hard a comp essentially for what they're going to do next year. So that's where I'm at relative to Oracle. But what I think really you're speaking to is this bigger dynamic around what's going on. I think Steve talked about it here. Is this the facts? The facts are this week was a really good week for AI fundamentally. It sounds that comment seems out of touch with reality. And I think the question comes down to this fatigue that Steve talked about. I think as at what point, what's the events that are going to cause that fatigue to be reversed and people to be more open to hearing about the good improvements in fundamentals?
What do you think that event is, Gene?
So my sense is that, I mean, I would love, like, if I could get one thing for the holidays, it would be for the AI trade to be down another 10%. If you look kind of across the board, depending upon the small and large, it's off 10, 20%-ish. But I think just a really good, almost like a thrashing, we need that at this point, just so investors feel like that there's some form of a bottom end. So I think that would be one. If we don't get that, and my sense is we probably don't get that, because as we move to the end of the year, the conversation's going to turn back. This market is still a positive market. There's still optimism around AI. The conversation's going to shift back to what to expect, what we're going to hear on the December earnings, kind of. So what's going to happen at the end of January? And my sense is investors are going to want to be positively positioned. So unfortunately, I'm not going to get what I'm wishing for, is a flush in AI here. So as far as getting that fatigue to improve, it's not going to happen just based on the December results. But I think as the fundamentals continue to prove themselves out, and they will, we're still early in AI. It's still going to be more transformative than most people think. As that reality sets in, I think that these stocks are going to respond appropriately in the first half of the year. But it's got to be coming down to actual prints, probably a combo of the December and March quarters.
Mm-hmm. So, Gene, do we ever get another DeepSeek moment where it is a commoditized business, right? Where in the U.S., it seems like we're wasting a lot of billions. This is, a depreciating asset, basically. Do we ever see that again?
Well, on the commodity part, one kind of distinction when I think about the commodity, the biggest piece on commodity is token pricing. There's the hardware piece, which depreciates over 5-6 years, something like that. You can debate commodity, but best chips do help performance. But when I think about the risk of like commoditizing this whole AI story, it's about the race to the bottom. When Sam Altman talks about a 10x annual decline in pricing for the foreseeable years, how do you kind of get that to grow? And I think actually I'm in a little bit of a different camp. I think this Jevons paradox that I think Sundar had talked about earlier in the year, this idea that as pricing comes down, usage will increase. Google experienced this back with search and mobile. And so my sense is that actually not all, I just want to start there, is I don't think all token pricing is going to be down 10x. I think the good tokens are going to be still priced well enough that we're going to see growth. Sam Altman this week still standing by that they're going to double revenue for the next few years. If that happens, I think that's going to be just a really favorable sign that this is not totally commoditized.